Hi, and welcome to Business 101 with Mareevuitton. I'm Marie, and I'm excited to have you join me. Whether you're just starting out or looking to sharpen your skills, this series is designed to equip you with the essential knowledge and tools you need to thrive, from basic terminology to starting your business. Covered. This playlist is comprised of my responses to the questions that came in when I posed the following. Give me 1 to 2 questions about business or tax that you wish you knew more about. In this video, we're going to go over LLC versus corporations. But before we jump in, a quick reminder. This channel is about creating useful content that educates its viewers. And the way we know what topics are helpful to you is by clicking the thumbs up button below and sharing this video with others. And of course, we'd love to hear from you. So drop your questions and feedback in the comments below, and be sure to hit the subscribe button to stay updated. So the question is about the tax benefits of an LLC versus a corp. Okay, this comes up a lot, and I don't know how to simplify this explanation or this flow chart even more, but I will continue to try to take different angles on it to try to explain in the most basic of terms. So an LLC in its most basic form can be a sole owner. If it is multiple owners, then there should be a partnership agreement in place. That partnership agreement outlines ownership. It outlines how things are treated for tax and things of that nature. So what happens is on a sole prop, this is your business is reported on a Schedule C. Even if it has its own tax ID, you would add that to your Schedule C and claim it with your personal taxes. That can't happen for a partnership, because what happens is the partnership earns its income. Okay, like a partnership would earn, let's just say, $100,000 in revenue. I always use that number. I don't know why. It's a nice, easy number. So let's just say it earned $100,000, and the cost for it to operate the business and keep business flowing was $75,000. Okay, I'm just going to use these nice basic numbers. Okay, so that means there's a profitability here of $25,000. Okay, on a partnership, that $25,000 is then broken out however the partnership agreement reads. So if in a case where there's 2 business partners, which I would never say to go 50-50 with anybody. I would always recommend 51% and 49%, because somebody has to be able to override should there be something that you can't agree on. So somebody has to be able to override. So that's my 2 cents, but I know a lot of people want to go 50-50. Okay, so in that case, the way we would treat this for the sake of tax is by taking that $25,000 and now reporting it on a K-1, and these would be their equal splits. Okay, that's fine and dandy in its most basic situation, but oftentimes when there are 2 business owners, there's a bunch of other things that go on. So if at any point during the year anybody took out cash from the business for personal expenses or otherwise, that is reflected obviously, and we true it up. So it might not be these numbers, but in a basic situation, that is how that split would go. Okay, if we did it with a third partner, it would just kind of be 33.333% throughout, and that's what you would claim on. So the K-1 that would come with any of these tax returns, I like to tell people, I treat the K-1 as like a W-2, but for business owners. Okay, like that's their tax document. employees get a W-2 at the end of the year. Okay. For business owners, especially when that isn't a sole prop, they are getting a K-1. Okay. Hopefully that makes sense, but that is how it's treated. So if you are an S Corp and you're a single owner, same thing. Okay. The main differences in this, like that's how this flow through is how it's going to get treated here, any type of partnership. Okay. So that is what you need to know about that. The differences are most likely in the responsibilities. Okay, those are the different things, and the fact that you have to have a board of directors on a corp if you have a partnership. Okay, and the difference with an S corp is their citizenship requirements. With the C corp, I probably would never tell anybody to do that unless you plan on going public one day. Okay, that's my 2 cents on that. If you have more questions or want to discuss any of this, you can book a call or you can leave your questions, comments, and feedback below. Thanks.